Today I thought I'd show you how I build out a page that I feature in my ETF All Stars. Namely, I'll show you how I build out the XGRO breakdown. So if you're not aware, if you go to Money Engineer and navigate to the ETF All Stars here, you see which are the big five ETFs I hold in my portfolio. And if you read more here, I try to break down exactly what's inside of XGRO. So XGRO is a fund of funds, and the way that you can understand what's inside it. I mean, you can just go read this article, which is absolutely fine, of course. But I figured I'd show you how I build it out. So the first thing to do is to actually go and visit the XGRO page over on BlackRock's website. And by clicking on holdings, you can quickly get down to what's exactly inside XGRO. So the first thing they'll show you is the top 10 holdings. And like I mentioned, XGRO is a fund of funds. So what you're going to see as their top holdings is a bunch of other ETFs, which is fine. Right now, and this is as of November 26th, ITOT or ITOT, if you like, is 36.42% of the portfolio. Another way of thinking about that is for every $100 you invest in XGRO, you're actually putting $36.42 into ITOT, which is how I get the first number here, 36.42. So that's pretty simple. But what about what's inside ITOT? That's kind of interesting to people. You can't see that here, but fortunately they also have another tab here called aggregate underlying holdings, which is a fancy way of saying, okay, well, what are the stocks underneath each of these fund of funds? So here you can very quickly see exactly what the top stocks are. And by looking at the ISIN number, you can actually see what exchange it trades on. So when we're talking about ITOT, we're talking about US stocks. And so when you see US here, you know that's part of ITOT. So NVIDIA 2.43%, or put another way, $2.43 of every single dollar or every $100 you put into XGRO will yield NVIDIA. $2.27 for Apple, $1.99 for Microsoft, and so on and so on. So I think you begin to see how this can work, right? Especially if you only care about the very largest of them. And I broke that down a little bit for you. I recently updated this page. It was the previous update was in January, and it's pretty much the same. What's changed a little bit, Broadcom has replaced Meta in the list here. Meta is just below the line here. They're the next one up, around 75 cents, I think. So, you hear about the Magnificent Seven, you're excited about the Magnificent Seven, you're worried about the Magnificent Seven. Well, you got quite a bit of money in the Magnificent Seven when you buy XGRO. So, roughly, what is that? $2 here, so it's about $10 for every $100 that you invest in XGRO is going towards the Magnificent Seven. So then moving along, and we just do this the same way for each of the categories, right? So going back to XGRO and going back to the top 10 holdings, you see the very next fund of funds held is XIC, which is the S&P TSX, aka the Canadian stock market. Again, since we maybe only really care about the very largest stocks here, you can again look at the ISIN number and look for CA, which stands for Canada. And so your top Canadian stock is the Royal Bank of Canada, weighing in at $1.40 for every $100 you put into XGRO. Shopify is right below that at $1.26, and so on and so on and so on. You get a sense of the Canadian stock market is much more tilted towards financials, banks, and that's very clear just looking right here at the at the top 10 listed here. Heading back to my little chart here, then the next fund listed within XGRO is XEF, which is the international stock market. So that's everything outside of North America, except emerging markets. So emerging in XGRO is treated separately. We'll get to that in a minute. So going back to XGRO and the top 10 holdings of XGRO, XEF weighs in at 19.49%, which corresponds to $19.49 of your $100 investment. So here, the contributions are getting a little bit smaller, but I did the work for you, and I found ASML at 34 cents, AstraZeneca at 24 cents. That bumped out SAP, in fact, in the matrix here. If you want to get a better look, it's better to go to XEF itself. Here you can look at. Oh, sorry, this isn't XEF. That's emerging markets. Maybe I don't have it open here, so let's quickly open it. And the way I always do that is just go XEF ETF in Google, and there you go. It's here, and you can go right to it. And if we go to the holdings over here, you can see, yeah, so here, it's also a fund of funds. It's holding, another a US denominated ETF, so it's much better to look at the all holdings here, much clearer. Wow, look at that. What we have here now is even the top, they haven't broken it down. So in order to get to the actual number, wow, and that's not good at all. So now my numbers are wrong because what I'm finding here is ASML $1.69, but some of ASML is also held in IEFA. So I'm not accurate here with respect to the amount of ASML I have in my portfolio. The way to get the total amount of ASML would be to take this and add another 3% of whatever it holds in IFEA. So it's not going to be a lot, but um, that's where you can get into a little bit of trouble. When the fund of funds is also holding funds, it can get kind of complicated. So if we go to IEFA and we look at its holdings, so ASML is the top, so it's 1.77%. So in order to get the right number, I would have to add $1.69 plus 3.66% of $1.77, which is going to be not a whole heck of a lot. I could, pull out the calculator, but anyway, that's something I guess I have to revisit a little bit in this chart if I want it to be absolutely accurate. But 34 cents is still going to be pretty close. Then XBB, same idea here. XBB, and I don't think I'll go bother breakdown, but you can see in the XGRO breakdown, $12.26 in XBB. You got $4.18 in XEC over here, and so on and so on. So you can, very quickly get a sense of what's inside of XGRO. What's interesting here is, of course, XGRO has a lot of bonds, and one of the things I talk about here is, bonds got an awful lot of hate, and a lot of people don't like bonds in their portfolios. They tend to provide a stabilizing kind of influence in your portfolio, but the returns are just not there. But lately, XBB's done not too badly. If you take a look at XBB, for instance. You don't have to take my word for it. If you look at the performance here, so you can see why they got so much hate. This little dip here happening in the early part of the 2020s is bad. That really put a damper on the enthusiasm people had for bonds. But if you take a look at the full chart, you can see there's been a pretty nice recovery, in the last year or two. Even the 3-year picture looks pretty good. It's when you start to zoom out to 5 years, it looks horrendous. And you realize that the bond market is only just now beginning to make up everything it lost over the last 4 years. So you can see why bonds are not so popular, but over the last couple of years, it's been not a bad thing to have in your portfolio, even providing a nice positive return. Um, I think that's probably a pretty good overview of how all of this table gets built. I encourage you to always take a look at the ETF fact sheets that I've been using here to get a sense of what's inside the things you're investing in. That's all for now, and talk to you again.